Good day everyone and welcome back to class. We've talked about what Forex is, and we've talked about which or what to trade. We've talked about why we trade Forex. We've talked about who trades Forex. We've talked about when to trade Forex, and now we're going to be talking about how to trade Forex. How to trade Forex. Now, Forex is a trade like every other business, like every other trade. And the essence of making a trade is to make profit. So if you're going to make profit from buying an item, that means you want to buy it at the lowest price possible. And if you're going to make profit from selling an item, then you want to sell it at the highest price possible. Which means that if you have bought a car, for instance, for say 500,000, and you want to sell that car back at the profit, you'd be expecting to sell it for at least 501,000 naira, so that you know that you have made at least 1,000 naira on top of it. And if you bought a car at 500,000 and you end up selling the car back at, let's say, 499,000, you wouldn't say you have made a profit. You've succeeded in making a trade, but there has been no profit in that trade. You have not made any money from that trade, but rather you have even lost some money, and that we will call a loss. So as a result of that, we want to trade to make profit. You want to do business to make profit. The same thing applies in Forex as well. When you're trading Forex, you're trading Forex to make profit, to make money. That's just the essence of it, to make money, to make money. Now, making money in Forex is tied to when and how you buy and sell. When and how you buy and sell. So in other words, before you can make money in Forex, you have to either buy and sell. Okay? Before you can make money in Forex, you have to either buy or sell. So what are we buying? What are we selling? We talk about that under what is Forex and currencies. We sell currencies. We sell currencies and we sell them in pairs, which means we are selling one currency as against another or buying one currency as against another. So currency trade is in pairs. So this is what we do. Now, how do you make money from trading Forex? Number one, you buy when price is at its lowest. You buy when price is, is at its lowest, and sell when price is at its highest. Sell when price is high. Let me just use that term. You buy when price is low and sell when price is high. What does that mean? Okay, so what does it mean? It means that we buy when price is at its perceived lowest point. Okay, we buy when price is at its perceived lowest point, and we sell when price is at its perceived high point. Now, okay, sorry about that. If you look at this current chart now that we're looking at, you realize that price is lowest at these points, and these are the points where you can buy. And when you buy at this point, you have price going all the way to this point, and that is where you make profit, because you buy at this point and then you'll be selling up somewhere around here. So if you buy at this point, which is at about 0.8527, and sell at this point, which is about 0.8797 or 0.8763, you realize that you will be making a profit of the difference between this and this. So you can make money in Forex by buying at the market's lowest point and selling at its highest point. Now let's look at the highest point. If I take a point like this, if I take a point as this now, that would be a high point, right? And I could sell at this point and allow market to drop as far as this point, or even go as low as this point, and I would be making the difference between here and here, which is a lot of difference. Okay, so you buy when price is at its highest point and you sell. You buy when price is at its lowest point and you sell when price is at its highest point. That is how we make money in Forex. Now, how do you know when price is at its highest point and how do you know when price is at its lowest point? That is what this entire course is all about. So in the course of this training, we are going to be I'm going to be teaching you exactly how I figure out when price has reached the highest point and when price is at its lowest point. So I'll know when to buy and when to sell. So let's move on to how we know these things. What are the terms that we encounter when we're trading Forex? So in the next video, because I don't want this video to be too long, I'm going to be stopping it right about now. In the next video, we'll be talking about pips and pipettes. And after that, we're going to be talking about lots and leverages, different Forex orders, and so on and so forth. These are all under how to trade Forex. So just remember this in summary, that in Forex, we'll make money by buying and selling. And when do we buy? We buy when price is at its lowest point, and we sell when price is at its highest point. Now, price is always moving in this range like this. So, price is always moving in this range like this. So you look for that point when price is at its lowest point and is about to go up, then you buy at that point, and then you sell, you follow it up and you sell when you perceive that it has reached its highest point. Okay, let me change that definition. We buy when price is at its perceived lowest point and we sell when price is at its perceived highest point. Perceived for each person might be different. I may perceive this one as the lowest point, while another person would wait for this point as the lowest point. I may see this as my highest point and decide to sell down here, while another person will wait for this point as his highest point and decide to sell this way. Okay, so everyone has his own perception of price movement, but I will be teaching you such that you'll be able to determine what is your own perception and what you intend to trade. Now, all traders are not the same. There are traders who trade for the difference between here and here, while there are traders who wait for moves as big as this. Some traders only look for moves as tiny as this one, while some traders look for moves as from here all the way to this top. So by the end of this course, you should be able to know what kind of trader you are and how to make the best of the kind of trader that you are. So let's go on to the next video and break some of these terminologies down for you. See you in the next video. Alright guys, welcome back. Hello guys, welcome back. So right now we are treating pips and pipettes, and that is under how to trade Forex. So these are some of the lingo, some of the terms used in Forex. Now, a pip is the smallest unit of change. The smallest unit of change. Smallest recognized unit of change, sorry. Recognized unit of change in a currency price. In the price of a currency pair. In the price of a currency pair. The price of a currency pair. Okay, so the smallest unit of change, that is when price changes, when price of a currency changes, the smallest change that you can have that is recognized in that change, the smallest unit of that change that is recognized is a pip. Now, the price of every currency is marked out in decimal places. Okay, so we have either 4 decimal places or 2 decimal places. That is, whatever a figure, a figure, let's say 0 point, then 4 decimal places after that, or a figure point 2 decimal places, whichever one of that works depending on the currency pair. Now, only JPY pairs, any pair that has JPY in it, Euro JPY, USD JPY, GBP JPY, odd JPY, Canadian dollar JPY, anything that has JPY in it would have 2 decimal places, while every other currency pair would have 4 decimal places. So what that means is this: on the JPY pairs, the price is usually higher than 1, of course, because naturally Japanese yen is the largest currency in the world. So let's say JPY USD, for instance, now maybe how do I put it, let's say 112 points, it will be something like 36. You won't have 4 decimal places because it's JPY. But when it's every other currency pair, you could have something like 1.4618, 4 decimal places, because it is every other currency pair. Okay, so a pip is the smallest unit of that currency pair. I mean, smallest unit in the change of that currency pair. Let's slide over to a forex chart right now and take a look at what we see in the price of the currency, and then we can be able, maybe we'll understand better what a pip is. Okay, so this is our chart, and as you can see, on the left hand side here, at this area, you have the currency prices. Okay, you have the price of all the currencies. Now, if you look at those prices, you realize that anyone that has JPY in it would have the first, the figures before the dot larger than 1, usually larger than 1, and then after that, you now have 2 decimal places like this. You see, like NZD JPY, you see that they all have 2 decimal places, 0.04 to 0.05, 0.08 to 0.09. But in the case of the others, like GBP odd, for instance, now you see it has 4 decimal places. The USD CHF, it has 4 decimal places. You have the Euro USD, has 4 decimal places. Ignore the tiny figures, the tiny numbers you are seeing at the top corner there. We'll come to that later, but for now we are dealing with the main numbers themselves. So these ones that have the 4 decimal places right here, this and this and these are 4 decimal places, while the other ones, these guys and any other what's it called, any other JPY pair that you can see would also have 4 decimal places. Now, apart from JPY pairs, other instruments that may actually have 2 decimal places are maybe commodities, metals. Like this is gold, for instance. Gold is a metal, so it has 2 decimal places, as you can see here. Let me try and clear all of this. Okay, so you see that gold also has 2 decimal places and doesn't have that small figure. The same thing applies to UK oil. Same thing applies to a few other instruments, US oil as well. Can you see that? So all of these are what price is about. Now, if you look at this price, you see that the prices are changing. This is 52 right now. In a matter of a few seconds, it will change to a different number. And you see the same thing happening across. You see now it's 53. And so that change from 52 to 53 is 1 pip change, and then changes back to 52. That's another 1 pip drop, and so on and so forth. So it keeps changing like that. Now, as price changes like that, is changing in what we call pips. So when you're calculating your forex profit, you're calculating your profit as well in pips. So I'm going to get out of this marker right now so we can see our chart better. So you see all your instruments on the left here. The instruments are all on the left. Okay, and then you have the chart itself on the right. I told you I'm working with my tablet at the moment, so you might not be seeing the same thing you'll be seeing if you are looking at yours on a system. We're going to talk about installing both on a laptop and using the MT4 both on a laptop, on a mobile phone, and on a tablet. No, we are seeing it already on the tablet right now. We'll be working with tablet most of the time, but we're still going to do a review back to using a laptop or a desktop, as well as using a mobile phone. Okay, so that having been said, that takes care of pips. So a pip is the smallest unit of change in the price of a currency. So later on, we're going to talk about how pip becomes money and how much the pip would become when you're trading in forex. Now, pipettes. Come back to pipette. A pipette is a fraction of a pip. A pipette is a fraction of a pip. Now we know what a pip is. Now, what makes up a pip is a collection of pipettes. A collection of pipettes. Now, remember when we looked at the charts initially, we had prices like 1.1246 and then there was one small 3, small on top of it like this. Now, this 3 you have here is a pipette. Okay, this is how it came into being. You know, initially before now, prices of forex currency pair prices used to just come out like this in 4 decimal places without any of this nonsense anywhere around it. Now, it became an issue because you realize that 2 people will take a trade, the same time, the same moment at the same price, and close at exactly the same time, the same price, the same moment at the same price. And they realize that one person's profits might be a little bit higher than the other, a little bit higher than the other. Or sometimes you calculate your profits, the profit you get from a trade, and then you check the pips difference in the price of your currency, and you realize that there is a little difference in the profit that you make. For instance, your profit is supposed to be $76, but when you check your profit, you see $76.98 as profit, and then you are wondering where this 98 came from. So because of that, brokers decided to introduce the pipette. They decided to introduce the pipette. Now, the pipette is the smallest, the tiniest change. It's not recognized per se because we don't use it in calculation. We don't use this in any calculation at all when it comes to calculating price movement and all that. It is ignorable. You can just ignore it and move on to use the main figures themselves. But that notwithstanding, it still reflects when it comes to your profit. Okay, when it comes to the monetary value of your trade, either in profit or in loss. Okay, so as a result of that, it came into being. So a pipette is a fraction of a pip. Now 10 pipettes equals 1 pip. So these 3 will have to become 4, and then 5, and 6, 7, 8, 9, and before this one we change to 0, and this becomes 0 too. And then it starts again 1, 2, 3, 4, 5, 6, 7, 8, 9, and then this becomes 8, and this one becomes 0 again. So that is just, around is like the kobo part of a pipette. Okay, for us in Nigeria, it's like the kobo part of a pipette, and for those who are outside Nigeria or wherever it may be, let's use the general king of currency. It's like the cent part of a pipette, the cent part of a pipette in dollar. Okay, if a dollar is a pip, then a cent is a pipette. Okay, if a dollar is a pip, then a cent is a pipette. If a naira is a pip, then a kobo is a pipette. So that brings us to the end of pips and pipettes. In the next video, we're going to be looking at lots and leverages. And I wouldn't want this video to be too long either, so I'll stop it right here and we'll move on to the next video. See you in the next video, and thank you for watching this.